Good morning, traders, and welcome to the weekend update here on November 12th, 2023. So these are the current open positions I have in the alert service. And I'll just kind of quickly run through these, what the game plan is, etc. But I want to take a look at our markets first. Let's look and kind of see what has transpired here. And as most of you know, our equity curve in the alert service took a hit last week, still up over 100% year to date, so certainly can't complain. That's about 11 months in, but did take a big hit last week, and that was largely a result of this massive move. So this is the SPX. Our markets dropped from 4,400 down to 4,100. That's a 300-point move, so a little under a 10% down move, followed instantly by a larger or almost 10% up move. Literally, 10 days down, 10 days up. If you're delta neutral trading, if you're trying to trade in a range, when you have a range that is this massive, that happens this fast, you end up kind of chasing your tail. It's very, very difficult to adjust your trades fast enough to stay profitable in this type of environment. Now, it's a little easier to do, I will say, in a down move because as volatility is picking up, you can adjust your trades and you can get usually more money because volatility is higher. So as options sellers, there's premium to be had in there when we are adjusting on the way down. So the down move's a little easier to manage. And I think we were doing just fine through a bulk of that down move. It's this up move that just slapped us silly a little bit because that came so hard, so fast with a gap, another gap, another gap. So even if you waited till the next day in some of these cases to see, after a big move like this and into a resistance area, my common thinking was, all right, well, let's see what happens tomorrow. Let's see if this, run holds. Well, it didn't only hold, it gapped up significantly and ran. And then we're right into resistance here again. So the common thinking for me was, let's wait and kind of see what happens tomorrow. Well, we gapped up again and then ran throughout the day. So those are things that are a little bit unexpected, particularly as we're looking at a market environment that we have right now. And that market environment meaning going into debt ceiling issues coming up here in a couple weeks. Of course, the political environment and some of the things that are happening around the world with Israel, Hamas, Ukraine, etc. So all of those things normally kind of create some, I would say some hesitation in the markets, but we're not getting that. In addition to that, volatility is really low again. In fact, if I come in and I take a look at the VIX, which I will often do, look how much volatility has dropped in the past couple weeks since that market run-up started taking place. This is a huge drop in volatility. So as sellers of volatility, this is a tougher environment for us as the market dropped, and we're attempting to make adjustments. We're rolling out call spreads in the case of one of our trades. We're just getting less and less for those trades as we're rolling them out because volatility is dropping on us and we're just not able to get as much premium out of those trades. And of course, that creates for a much more difficult environment when you're trying to adjust. So that's kind of what created the difficult environment we had that did create a dip in the equity curve and also created problems for this specific trade. So just in walking through these trades, well, actually, let me come back and just kind of quickly take a look at market expectations, and then we'll go back and take a look at our specific trades. So I've put in two white lines here. My expectation right now would be if our market were to continue up, that it might come into this white line area around the 44.50 because that had been resistance here. It had been resistance here. it had been a little bit of resistance here that broke out. Then when it pulled back, we kind of chopped around this area for a few days, so that became support, became resistance again. Then we blew through it, became a little bit of support, fell through. So anything that has a battle line, if you will, that has been kind of an area of choppiness in the past, tells me there might still be some choppiness there. There's buyers and sellers that are struggling at that point. And that struggle causes that back and forth motion in our markets. So my expectation is that we might get a little bit of a stalling here if we get up to that 44.50. And if we do, I'm expecting, a range sort of like this. Here we had support. It was support for a day or two, kind of a battle around that area, and then fell through. Then it became resistance, then it became support. And then, of course, we just had this big move down, big move up. So my expectation is that around this area, the 43.20, may still be a little bit of a support area. So I'm expecting, call it 4,300 up to probably the 44.50, 44.60 range as a logical range. The two caveats, of course, to that are the news that are coming up on debt ceiling, things like that. And we are running into the end of the year where many times you have what's called the Santa Claus rally. That's where the market just rallies really hard going into the close of the year. That is something that happens somewhat regularly. And with volatility as low as it is, I think the odds of something like that happening are increased a little bit as well. So, given that that's kind of my expectation on a range, again, 44.50 range down to about 4,300, looking at our position, I mean, I would love it if on this position, I took off the call spread here on Friday because that had about another $1,000 in risk in it if our market continued up. I just didn't want to take that risk on another gap up over the weekend. I feel like our markets have run very hard to the upside. I personally feel like they're due for a little bit of a stall or a pullback. But I didn't want to take that continued risk on this trade. So I essentially neutralize this trade so there's no additional risk to the upside. And what I'm looking to have happen here is a little bit of a pullback, maybe in the first couple days of this coming week. If that does happen, then I'll look to see if I can maybe sell a put spread or something here to bring in some additional premium that might help offset the current loss in this trade. This trade still has 2 weeks to go on it. This trade was put on 10 days ago. It's in good shape. I like it where we're at. We're positive delta, meaning that this is going to decay in this general range, assuming, of course, our market doesn't fully drop. If the market does, in fact, continue up, that's perfectly fine for this trade. We currently have no risk of loss to the upside. So if our market continues up, there will be additional adjustments that will come in here where we'll end up raising this right wing a little more and taking out some of the risk to the downside. This particular trade was up quite a bit more, actually, earlier in the week when our market was back here. That's what I'd like to see on this again, is a little bit of a pullback. And we get that little bit of a pullback, I'll look to thin out the risk in this trade, raising the right wing, raising this lower wing, and essentially just locking in maybe a little bit more profit, taking some of the risk off the table in this trade. But I'd like to see a little bit of a pullback to start thinning that. This particular trade here was just put on only a few days ago. Now, what's unique about this trade? Let me, in fact, I can just shut this down here, my face here. So what's a little unique about this one is, well, first of all, I did it in rut. I also did it further out. I did it almost 45 days out at the time I entered it. And it's a pretty darn wide range, 1750 down to about 1640. So for the rut, particularly, that's a very wide range. So the two things I did here, I went further out in time And then I also did something, a different structure that gives me a much wider market range. I did that because right now our market is ranging much, much wider. I don't want to have to chase the market as much if we get up and down moves. So I therefore put something on that has a credit spread here on this side. This is calls, a call credit spread. I've got a put credit spread here, but yet I did something a little bit different in that I bought a put spread here. So a little bit unconventional, but what this does is it makes this trade more resilient to back and forth chops. It gives me a much wider range. All that said, it's also going to decay a little bit slower. If the market stays in this range, the profit will come into this trade, but it's going to come in slower because I'm further out and because I also bought a spread in here. So I'm trading off faster decay for a more robust structure in my trade. And again, that was all by design. I wanted to introduce this newer structure to people. It goes by a bunch of different names. Some people call it the car. I've heard it called the Jeep. I've heard it called the trapdoor condor. I've heard it called a skewed condor. There's just a lot of different names that this thing can go by. But anyhow, my goal was to share this with people and introduce this as an alternative structure. The remaining individual trades on stocks. So, of course, I've got the Google wheel strategy. I've got a put out there at 135 that I sold. Google sold off significantly. It is rallying back at this point. But rather than sitting here and maybe taking assignment on this, at this point, I think I'm just going to roll my put out this week. It's only got 5 days in it, so I need to do this sooner as opposed to later. So I'll probably roll this out Monday or Tuesday, just roll it out a month in time, collect some more premium on it. I'm not sure the exact strike I'll roll that to, but that will be something I'll do early this week. This trade here was the Starbucks earnings trade that went against me a little bit, and I could have closed that out for around a $300 loss, but I told people that I would show how to battle this. I do not like this trade. I don't like it because the reward is relatively small compared to the risk. A logical thing to have done would have been to just take the small loss and move on. But I did tell people that I would show them ways of battling this. So that's what I did on this. I converted this from a calendar into a butterfly. And now I'm waiting for decay to happen here. I will be looking to take this off hopefully fairly early this week. It may not be for a profit, but hopefully it will be for a smaller loss than what it would have been had I taken it off last week, and a smaller loss than what it's showing here. The eBay bonus earnings trade, this one, after a couple days in this trade, it was up about 100% in profit. I took half the trade off, meaning that I essentially I turned it into a no-lose trade because I was able to take half the position off with a 100% return. There is now no risk of loss in this trade. Now I can lose. I'm up $140. I could potentially lose the bulk of that 140 if the market ripped up or ripped down. But I would not lose any of my, I guess you'd call it, original principal, if you would. So my goal on this one is to maybe milk this a few more days, try to pull a little more profit out of this thing. If we get a little bit of a pullback in the market, that profit will even be more pronounced. And I do have an order setting out there to close the half, I guess it would be a quarter of my original position, but half of my remaining half position. I've got an order out there to close, and it came close to hitting on Friday, but did not. I would expect if we don't get a massive move that will hit early this week, and then I'll look to just filter out of the remaining few contracts throughout the week and get this trade closed. So that's kind of the game plan on the current open trades. I may very well add a new trade this week also after I get some of these three stock positions tweaked a little bit or closed. I might add another at that point, maybe an SPX trade. But I'd like to see a little bit of market pullback, a little bit of volatility come in before doing that so that I could get a little more premium out of the trade. So that's the update here for November 12th, 2023, and I'll look forward to seeing everyone in the room this week. Take care.